Hey guys, today's Wednesday. We had CPI today, and I have to be honest, today was really rough day for me trading. I basically overtraded a lot today, I have to admit. Price action was not really easy today. We had also really high volatility. Therefore, I really was kind of trading my stop way too tight. Was kind of also afraid of losing due to the fact that I traded my funded account today. Still, I managed to end up in green for the day. But yeah, definitely should not be really proud of today's trading day. It was really stressful day. Was not really well managed, I have to admit. I mean, yeah, definitely the market maker sell model at the end was really clean. Was nicely done. But yeah, just way too many trades in here. We have still to keep in mind what I already know. What we do know is that yeah, if our 10 macro does not deliver, if we are stuck in high resistance, we just have to wait for the right time, and that's our long and close macro. So basically, lots of trades which could have been avoided. But yeah, so maybe let's start with the daily conditions and then we go back to the executions, why I took them and what was my thinking process. So as you see, right now in the daily already, yeah, we are in definitely a really bearish conditions, especially on the weekly chart. You can see that also with last Friday we completely sold off. Monday basically retraced. We trade back into the daily fair gap right there, trade perfectly to the lower quadrant, and now sold off as well. And we are now trading basically within yesterday's price range. And I was looking at the daily wick, and to be more specific, I was looking at the 4-hour wick right there. And you can see the daily or 4-hour wick, so the wick quadrants right there, higher time frame quadrants. So let's drop to the hourly chart. So yeah, really aggressive price action right there within the AM session. As you know, yesterday we completely sold off. So therefore, already to be expected that we have a more slower day today, a more high resistance day, a kind of also difficult day to trade, just because we had such high volatility and low resistance yesterday. So therefore, kind of to be expected that we are in more difficult conditions. But yeah, Asia slowly traded lower. London as well followed, and then with Newcomb kill zone, we traded higher and kind of yeah, traded to the upside, sweeping session liquidity, but also engineered liquidity right there. So in advance of London highs. We had also equal Newcomb kill zone session liquidity down there, but in that case, yeah, because we already traded slowly lower as a retracement, as you can obviously see, and as you can see right there, that we here have also a clearly hourly market structure shift, that we are in more bullish conditions than bearish. So with 930 we just dumped higher to the upside, scrapped every session liquidity, and now we had our market maker sell model. I mean, on the 5-minute and also like on the 50-minute or a higher time frame, it kind of looks like a clean market maker buy model followed by a market maker sell model. But once you already drop to a 5-minute chart, you can already see the long wicks right there to the upside and to the downside, which already indicate high resistance conditions on the 1-minute chart on the lower time frame, which are most of the time difficult to trade, especially regarding stop loss management. So before we talk about the executions, once again I want to talk about regular trading hours as well. Maybe let's also take a quick glance on the high time frame right there. So we have all the or basically those 3 open range gaps right there, which are kind of still untraded to, which I look forward to that we trade to them. But yeah, we have a aggressive reaction from there. So yesterday completely trade lower, closed in completely Monday's new open range gap, and now we retrace and we are basically kind of stuck in this price range right there. So let's drop even lower. So for today we have a Newcomb range gap of 250 handles. So trading conditions, but as you see, we scrapped regular trading hours as liquidity, trade lower, and from then already trade higher, completely closed in today's Newcomb range gap. then consolidated right there, slowly traded higher, retraced higher, and then we kind of sold once more to the downside and also scrapped once again the AM session liquidity, so 930 low, and once again now we're consolidating. So back to electronic trading hours and executions. So what was my thinking process? So as you know, for the opening, it's definitely important to me, especially if we have CPI, how we trade at the liquidity. We have definitely the liquidity right there, which is important to us. Also, especially the 830 opening price. So with the opening, we opened up, trade higher, swept some buys liquidity right there, but not really. So more formed like equal highs. Trade lower, and ES was actually already trading back to the 830 opening price, as you can see right there, and from there we really traded to the upside aggressively, and I think that would have been already a quite clean entry right here, a market maker buy model on the lower time frame. But yeah, in a 1 minute I can't drop lower than a 1 minute, and in here that's not really a entry for me. I mean, you could have also maybe even thought about taking like the trader there within the first presented fair gap, trading a long in here, but it was actually at that time not even able to trade because my broker had some, so my prop firm had some issues. But then basically what I really liked was the setup right there. We scrapped basically for the first time CES liquidity, only with a wick, so short term run stops. We had CSD, so close above the down close candle right there, so or basically the high of the or the short term high. In that case, I really most of the time look at the bodies and not the wicks. And we found also the fair gap right there, trade into it. I want to see some reaction. Also was entering a bit late. I think I could have already taken this trade right there. What I wanted to see actually in the first place was that we trade back into the 5-minute rejection block right there. That would have been a perfect entry in that case, actually, for the upside. To trade just into it. That was what I was looking for, but we failed to do that. So we failed to trade even lower than the fair gap right there. Kind of missed this move right there, but still entered with one contract because, yeah, once again, really high volatility. As you see, just only this to the upside, already 60 handled. So completely insane. But I was having my stop really tight, so only below the wick right there because we already traded into the fair gap. We have kind of high resistance in here. Really wanted to see that we trade with speed to the upside back to the heights right there. And yeah, I think I could have just closed my position right at the AM session liquidity right there, because once again, if you drop back to regular trading hours, if we are if we are trading basically in trading conditions and we don't have really high high probability conditions that we are going to expand higher, so like basically through and above the buys liquidity, it's best to just take the low-hanging fruit, taking your exit at the AM session liquidity, especially because with ES we already had S&T with Asia highs being in play. So we had S&T with Asia highs on ES, and therefore this would have been a perfect trade right there. You could have also just hold for a bit more, but then once again I got stopped right there, so could have just let my stop below the wick of the candle right there. Would have been enough, but yeah, high volatility, wrong stop loss management, and also being afraid of losing in that case on my funded account definitely was a bit more stressful today. I think that's definitely the right setup right there, but yeah, poorly managed in that case. Either going to I have to take my have to close right there the low hanging fruit, or I have to keep a wider stop. But from there on, actually a lot of overtrading occurred. So I think I went long once again right there, and yeah, got stopped. I went short, got stopped, went long, got stopped, went short, got stopped. I don't know, went long, got stopped, went short, got stopped, went long, got stopped, went short, got stopped, and finally went short right there. Also added one, took my first partial and took my second partial, and I ended up actually the day in break. No, actually in green, so was actually a not even a small winning day. Was actually a quite good winning day for me. But that's insane. So like I tend to way to overtrade. I mean, to me it was obvious that we are going to see one more push above the external buys liquidity, but especially if we already have high resistance. If you have SMT in play, just aim for the low hanging fruit, just trail your stop with reason. So keep a wider stop. Every trades in here are completely wrong because we are also not in the right time. Right here we are already overextended, we are already reached external buy liquidity. To chase anything in here long is completely wrong. Even if I expected that we would trade into the high time frame gap, but I also wanted to see that with 1030 or the long close macro, we would see some damage to the sell side because we have just this trend line liquidity to the upside. We did not basically sweep CPI lows, so at least if we leave the lows right there untouched, if we leave the news data lows untouched, we at least have to do some damage to the AM session says liquidity. But yeah, therefore wanted to see a market maker sell model. I thought already that it would occur with the with closing below the inversion of the gap right there. But yeah, we saw one small push above it, created SMT. Then I went short right there, got stopped. Yeah, definitely way too tight stop, but I was actually really afraid of losing today. It's just a fact that I was afraid of it. But yeah, I don't know if it's really good that I kept on trading, but I knew that I would see some price movement. Yeah, went short, added right there. And actually the price delivery right there is actually quite clean. Yeah, still a high resistance in here to work lower. But once we basically trade below the SMT low, once we can close below it, we really see low resistance. So as you can see right there, body closed basically below of the SMT. And once we saw this, only wicks into the balanced price range right there. So down close candle, up close candle. And then we completely sold off into the AM session liquidity right there. Why is this liquidity important to me? Because it's right at the 930 opening price, and more importantly, it basically is the low of the aggressive move to the upside. Definitely the AM session liquidity right there and 830 low is really important to me as well. But I would know that also because we are now trading at 11, or that we are perfectly at 11, we could see some more high resistance conditions, a higher, not higher time frame retracement, but as you know, like 5-minute retracement. That's what I'm trying to say. In that case, I'm really glad that I exited right there, because then we saw this really up close candle, which definitely could scare you in that case. But yeah, I'm also content with seeing that we still delivered to the downside and basically met our external sales liquidity draw. But yeah, I think that's basically it. So yeah, definitely a really stressful day today on my funded account. It's really difficult to just to trade on or with being more emotional. But yeah, definitely today was not easy. Still, I'm content with the day that I still caught this really nice market maker sell model. But yeah, I think still not there where I want to be, especially with the trade frequency and so on. I would like to be just, or to also have trading a bit more, that's not like the stressful way, it's just stressless. But for that, I mean, sometimes I had already trade conditions where I think took like only three trades a week, and all free trading days where only took one trade. But yeah, for that I need really good conditions, and because I'm not as disciplined as I should be, that if we do not have good conditions, that I then don't trade. I tend to trade every day, and that's it's definitely not the best approach, because we do not have every day good conditions. And once we do trade high resistance and not quality conditions, we tend to overtrade, because it's definitely a more difficult it's definitely more difficult to trade it high resistance, because regarding stop loss management, money management, psychology, and so on. But yeah, we are definitely getting better, and we will be there eventually someday. So yeah, we have to keep on moving forward. That's it for today. Probably will not trade tomorrow, and yeah, see you soon.